Welcome to Policy on Demand. I'm Sindhu Blume.
And I'm Scott McCandless. It is the week of October 23rd, and this is your Monday briefing. The Treasury Department has been busy working on international tax guidance.
And the agency wants to provide more guidance on how the United States will reconcile some issues relating to the global minimum tax. Pat Brown had a chance to speak recently with Wade Sutton and Laura Williams to discuss what they're hearing from the Treasury Department and companies. We hope you enjoyed this interview.
Wade, Laura, thanks so much for being here.
Thanks for having us.
Good to be here.
So, Laura, we're going to jump right in. Why don't we start with you? We've had the Inflation Reduction Act for a little while now. When should we expect to see additional guidance from the government on this?
Sure. So the government's issued a number of notices for the Inflation Reduction Act so far. The Inflation Reduction Act was enacted in mid-August of 2022. And the government has 18 months to issue final regulations if they want those rules to be retroactive back to the date of enactment. So that would be sometime in mid-February, we'd want to see final regulations, which means that NPRMs probably need to be issued fairly soon.
Yep. Wade, what are you hearing about the timing of guidance?
Yeah, I think there's a lot of contingency here because obviously the Inflation Reduction Act is a priority, but there are a lot of bandwidth issues in the government because there's a lot of guidance that needs to get out. And so on panels, you'll hear government speakers aspirationally talk about getting guidance out by year end. I think there's some contingency around, will there be a government shutdown in November?
Right.
That's still TBD. And then just, do they have the bandwidth to focus on all of the guidance, including some non-IRA guidance like 987 or foreign tax credits? I could see some of that slipping into 2024, just like the PTEP regulations.
Right. So that's timing. Now we want to talk a little bit about substance. Specifically, Laura, the corporate alternative minimum tax, or what some of us continue to stubbornly call the book minimum tax. What are we hearing about what might be contained in CAMT guidance? We know there are a number of open issues, and some of which the government talked about in its most recent notice. So what do we think will be in this next round of guidance, likely an NPRM, as you said?
That's right. It likely is going to be an NPRM, just given the timing that we discussed. A lot of the questions were answered as part of the notice, but the unanswered questions include things like double counting of CFC income. So that's because CFCs have a pro rata share that's included in the CAMT AFSI, but also dividends from entities that are not part of the U.S. consolidated group. And so that needs to be answered pretty quickly. We're expecting to see mark-to-market guidance as well as foreign parented group guidance in the next tranche or
Right. And on this double counting point, we know there were a bunch of grants of authority to Treasury in the statute, but one of them was specific to this point about double counting. So Treasury has the authority, bit of leeway to figure out what they want to do in that area. So that's something we'll certainly want to watch for. Wade, there's been activity in the foreign tax credit area, some of which caught all of us a bit by surprise, I think, this summer. So what do we think is coming up next with respect to foreign tax credits?
Sure, right. So in July, we had a notice, 2023-55, that basically said we're going to defer the application of the final regulations. Taxpayers can go back and apply the existing regulations from pre-2021, which has taken a lot of the pressure off some of the hard questions taxpayers were dealing with. The government had tried to do one-off piecemeal guidance to take some of the pressure off of cost recovery or the attribution requirements for royalties.
Right.
And I think there was just a recognition that they needed to pause and rethink. So the immediate question from taxpayers is, for example, hey, I have a fiscal year, and so I don't get full relief for 2023. What are you all going to do about that? And I think the government's been very transparent on panels that notice will be extended for at least a year. It'll cover fiscal years and calendar year taxpayers from what we understand. So I think there's a chance here for a rethink. In addition, there's guidance that we expect to come out this year about the creditability of taxes imposed under Pillar 2. We don't quite know what that will say. There's a very good New York State Bar report that has some suggestions that folks could look to as potentially an indication here. But I think that hopefully will be out by the end of the year and would likely be tied to the extension of the notice relief.
So Wade, do we think the extension that you referred to, is that potentially the last word in terms of what they will do with respect to those regulations, or do we think they're still engaged in a thought process there?
I think they're still engaged in a thought process. When we first saw it, my initial inclination was that this might be like the 987 regulations, which, as people know, were final and issued in 2016, but the applicability has been deferred basically every year since.
Right.
I think the government does not want to do that. I do think they want to go back and issue a new set of proposed rules here. So we'll just have to wait and see what that says.
Right. Okay. So Laura, we talked about CAMT. We talked about the foreign tax credit. What else do people have to look forward to in terms of guidance coming up from Treasury and the IRS?
So they're actively working on the cloud regulations, and those rules are going to be finalizing a proposed set of regulations. And we're expecting to see sourcing rules as part of that package. As Wade mentioned, 987 has been deferred since 2016. The government is planning to issue a new NPRM and not planning to defer those rules any further. PTEP is one that people have been waiting for a long time, and the government's been pushing really hard to try to get out. We were expecting it to be out by the end of this year. Now they're saying it will be 2024. And then the excise tax. So didn't mention that excise tax.
Section 4501. This was part of the Inflation Reduction Act. Right?
Exactly, yes. Yep. And so a notice was issued this year, but we're expecting to see an NPRM fairly soon.
Yep. So I can't resist but note that Section 987, which you guys both talked about, enacted in 1986, we have never had in force regulations under Section 987 going all the way back to 1991. We had proposed regulations. And ever since then, we've had versions of proposed regulations, some of which gone final, but not yet in effect. And now the government appears to be rethinking it. So this is obviously something that is of significant interest to a lot of taxpayers. We'll have to see how it plays out. So while we're waiting for this guidance that we're expecting to get from the government, what is high up on taxpayers' wall of worry? What are the kinds of things they're thinking about? Maybe, Laura, I'll start with you.
Well, for CAMT taxpayers, the double counting issue that I was talking about before is front of mind.
Right.
And it's preventing taxpayers from actually making dividend distributions. We know that the government is aware of the issue. They've said they're going to fix it. But because of the dollars involved, right, a lot of companies don't want to take the chance of making a distribution until they have relief in the form of a regulation.
Right. And to your point, Laura, what does double counting mean? You and I might have an understanding of what that means. If the government's understanding is just slightly different, on a very large dollar amount, that could be a real problem for a company, to be clear.
That's right. We have some indication that the government might actually use some sort of like PTEP-like regime for purposes of addressing double counting, which taxpayers will definitely need a lot of guidance if that's the direction they're going to go.
Yeah, details are really going to matter. Wade, how about you? What are you hearing from companies?
Sure. I mean, this may be a smaller group of companies, but for foreign parented companies, they really care about the funding rule that was in the excise tax, stock repurchase tax notice. And, you know, the issue there is for inverted companies, if they buy back shares, their U.S. subsidiaries are subject to the excise tax. And the funding rule was so broad that you could argue it effectively extended that rule in the statute to every foreign parented company. And so it's created a little bit of paralysis about what does it mean to fund my foreign parent if it's going to be doing buybacks? And that's created a lot of paralysis due to the uncertainty. You know, here I think is an issue where the Supreme Court's decision in Loper versus Bright Enterprises is going to be really important because that case is dealing with a fisheries act. I think it's the Magnus-Stevens Act, that there are several areas in the act where there's explicit mention of, you know, that you can have industry fund these programs. And in the case of these observers on the boats, that's the issue being litigated. There's no mention, it's silent, the statute about that issue. And so the regulation just sort of made it up out of thin air, claiming that the silence was ambiguity. I think that's very similar to the posture under the funding rule, right? There's an explicit rule for inverted companies, and it is silent as to the other foreign parent companies. And so I think how Loper Bright turns out could be really relevant to where the regulation goes.
Right. And obviously beyond just the Section 4501 regulations, the implications of that case for those of us in the tax world are really potentially quite significant. But we'll have to leave a further discussion of that to another day. Thank you both for joining me.
Thank you.
Thank you.
Linked in the description of this episode is the latest Week in Review with Pat Brown, and another Week in Review follows this Friday.
Thank you as always for spending this time with us. Stay with Policy on Demand for the latest developments from Washington and around the world. Take care.